Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right then, welcome back to YouTube. Today we are going to be looking at gold, specifically the CFDs on gold, and we're going to be looking at the SLV, which is our proxy for the silver market. So without further ado, let's dig into the gold count. We're just going to come out to the daily time frame first here, just to get rid of all these smaller time frame wave degrees, and we're just going to break it down so you can see what's currently going on. Coming off of the lows in September 2022, we're in this final 5-wave move up. I say final, not as any sense of long-term finality, but we will be completing a larger wave degree up here at potentially 2 degrees. The cycle wave degree is up for debate. This could be 3, this could be 1, we don't know. But the primary and intermediate degree I think are pretty much correct. This will be a 5th wave primary correction and a 5th wave intermediate within it once we've completed these 5 waves up. So in other words, we're not done yet. We're still in an upward trend of higher highs and higher lows. Things still look bullish. We just made an all-time high yesterday, and we should stick with the trend until proven wrong, right? That's what we do. We stick with the trend until proven wrong. The trend is your friend, but it will end later this year, maybe next year, probably later this year, and then we'll get a very significant correction. But in the long-term scheme of things, it will be another buying opportunity, because gold, believe me, when we look back at the chart from its inception, is, well, it's extremely bullish. You can tell for yourself it's only ever gone one direction, and this is the only direction it's going to be going. So either way, we've done 1, we've done 2, we've done 3, we've likely done 4 now, although it was very brief. Okay. And now we're moving away in 1 and 2, 3 and 4 and 5 of this 5th and final intermediate wave. So things still look bullish for the meantime, but we are getting a bit long in the tooth. So let's now zoom in to the 4-hour chart and have a look at this shorter time frame behavior we've got going on. So invalidation level for this count, we've come down a very brief and sharp wave 4. It may not, there is an alternative where this is just the A leg and this is the B and then there's a C to come lower in a flat pattern, but we're just going to make the assumption, having made new all-time highs for the moment, that we are indeed in a 5-wave move higher. So what we have is a minor wave 1 into a minor wave 2 as a flat pattern, and it's a pretty neat looking one as well. I'm just going to label this while I'm here, might as well. And then we've got a base channel, so we take our low, we take the low of our 2, we project from our high of the 1, and this is our base, our 1 into 2. From there we project forward in time. The wave 3 should breach out of this channel, and the 4 may backtest it, but doesn't always. So what we can do is we can add a little Fibonacci extension to this. We can go up into the wave 1. We can come back into the wave 2, and we can look for targets for a wave 3. Now the 1618 is a typical wave 3 target. That's here at 2881. Given the size of this pivot, I think we'll probably go higher, to be honest, but we can imagine 1 into 2 into 3 into 4 into 5, right? We could reach significantly higher targets if we reach for the 2618 extension. So we could go 1, 2, 3, 4, 5 or something like that. Either way, the count on the shorter term is very typical wave 3 extension behavior. Now what does all that mean? Well, let's get a pitchfork here and show you. So here's our 1-2 pivot within the base channel. Here's our 1-2 pivot within the original pitchfork. What we see is a series of overlapping smaller wave degrees which are outside of the original pivot for that pitchfork. This is very typical extension behavior. We drift sideways out of the fork, then we creep back inside of it, then we make a rush for the median line and the top of a longer term channel, then we make a rush for the top of the pitchfork if we are extremely bullish, right, which we could be. I don't know if that's the case, but it could be the case. So either way, as you can see, we are currently working our way back into this pitchfork as a series of 1, 2, 1, 2, 1, 2, 1, 2, 3, 4, 3, 4, 3, 4, so on and so forth. Now what this means is we're either going to have a completed, very small, very brief, minute wave 1 and 2 in this position rather than minuet, and we're already progressing within a minor 3, or we're going to get one more correction, one more pullback at a smaller wave degree. So in other words, 1 and 2, a smaller 1, 2, maybe to the top of the channel, maybe out of it, but back into the prior wave 1, and then we break away in the 3. And we get 1, 2, 1, 2, 3 4 3 4 at larger waves. Now we won't know if that's the case until it happens. So in other words, new all-time highs, wave 4 complete, we're in the 5th, we've done 1 and 2, we're in the 3 of the 5th, the 3rd of the 5th, and pushing higher in a pretty bullish extension as it appears at the moment. So let's turn all that off now because it's getting a little confusing. We'll throw these inside of that primary pattern there, primary folder. So there's your 1, there's your 2, we're off in the 3, looking for targets around the 1618 or maybe higher. What happens if we turn around? Well, if we turn around, we've either got 1 and 2 again before going higher. We've just talked about that. But what if we make new lows? What if we swing below that 2536 level? Well, that opens an alternative idea here, which I've got as STF flat, short-term flat in other words. And we've got a couple of target boxes up here. Now what we're going to do is we're just going to adjust these to be in linear targets. So we're going to move that to there. And we're going to bring this target box for the wave 4 into here like this. So what this is we've come down in an A. We've come back in 3 to a B. So we don't get 5, we get 3. We come into the target zone between the 100% retracement at 2790 or the 1618 extension at the maximum level of 2945 spot 219. From here, anywhere within this target box, we then come down in 5 for a C and we make new lows. So we need one, we can't place the last piece of data we need, which is an extension from the edge of the A from a B down to find the C at the 1618 or lower. Because we have to have the B wave top in and we don't have a pivot in place yet. We have no daily bullet bearish engulfing candle off of the back of strong bearish divergence. We have no reason to believe that the high is in. Right, there's no evidence of that yet. We're just pushing higher. So this would be the alternative. So let me now zoom out. I know this is a lot to take in, but we're getting a bit longer in the tooth now, so we have to take our time in explaining this. Let's do a super simplified version of the count. There's the primary. So what we'll do is we'll say, here's 1, here's 2, this is 3, this is 4, and now we're in the 5th. That's what our primary count is saying, brief wave 4 correction here at intermediate degree. Now if we channel this for the moment, 1 from 3 from 2, we can see we did not get a particularly deep wave 4 correction. If we check the length of that wave 4 correction here and we go into our wave 4 setting, we can see that we only came back to the 23.6. It is deep enough to be a wave 4 correction. More typically we would come back to a major support into a prior wave 4. Where's that prior wave 4? 1, 2, 3, 4 in here. We did not come back into that prior wave 4. We did not reach the deeper correction of 38.2. So that makes this whole thing a little bit more suspect. It doesn't have to come deeper. It doesn't have to be that flat pattern. It could just be very bullish. And it is very bullish. This is a very, very, very strong wave 3. We have come well beyond the 1618 and are continuing to expand higher. So that's how we would look at it. We would change this down to minor wave degree. In our alternate idea, where the C wave comes over here, all we do is move the 4 across to here. Like that. We would make a new low. Now as you can see, from channel to channel, point to point, this has a nicer look to it, admittedly. But this turns out to be a flat, and we have A down, B and C, like that. And we get this nice channel 1, 2, 3, 4, 5. We come back to a deeper target. Right, none of that has to happen. It's just basically an alternative option. So what I'm going to do is I'm going to throw all of that into that short-term flat folder, and that's just a reminder of the longer-term count. In the meantime, we can assume the wave 4 is complete, and we're just moving up higher now. And that's gold. I don't think there's anything else to cover from the Elliott wave perspective. As we get further along and we see some more evidence of things happening on the shorter time frame, how do we progress within this extension with all this overlapping data? Do we find the top and come back? Do we explode higher? We'll come back and view it in a couple of weeks' time, see what's happened to the chart. But we are still a ways off completing that 5th wave, I feel. We've got our alternative idea if we do come to new lows. So now let's zoom out and do a little bit of technical analysis, classical analysis. So let's start with our moving averages on the daily time frame, and let's bring up our momentum indicators here. So we can see We are above the 10, the 20, the 60 and the 250 exponential moving averages, all expanding higher, all looking very bullish. The MACD is back up level with prior peaks. The bearish divergence between these highs appears to have played out. This was the bearish divergence here between this high and this high. This is what led to this correction. We can see we've then come down into this correction, but we have since had higher strength in the RSI, pushing back until overbought conditions level with those prior peaks, suggesting that the RSI reset into oversold conditions on the daily time frame here was indeed the completed correction. It was brief in price terms, okay, but we can see that in terms of the loss of momentum and strength, it was a more sustained correction over a greater period. It's just that the first part of it was upwards rather than downwards. That's me talking about purely momentum and strength over time rather than the price. The price came down suddenly and quickly, but there was a warning it was coming. We had bearish divergence building up. We then had a bearish candle on the daily time frame, a bearish engulfing candle. This was a daily pivot. That turned into a weekly pivot, and then off we went. Lower through the 10, through the 20, through the 60 exponential moving averages. Since then, momentum has returned to positive with strong momentum on the histogram, and the RSI has pushed back up into overbought conditions. So from here, we get that 1 and a 2, we get a 3 and a 4 and a 5. Or we get another smaller wave degree 1, which will come back deeper in the 2, and we get a more explosive movement over the longer term. Either way, it all adds up to being in a 5th wave. Right then, so that's the daily time frame. Let's come and have a look at the weekly time frame. So we can see on the weekly time frame, we are still quite suppressed in terms of the overall momentum. There was no weekly bearish divergence into this high, suggesting that the longer term upward trend is still intact and that the overall upward momentum is still present. However, now that the momentum has drifted lower in the RSI and the MACD, this is synonymous with having found that 4th wave into that 5th. The 3rd to 5 at the top of the structure should elicit some bearish divergence. It won't always, but we are set up to do it. So we can see that overall the histogram is quite suppressed at the moment on the weekly time frame. Momentum has been dropping over several months. If this now does develop a divergence, so between this high and whatever high lies out there in the future, and we see that on the RSI and on the MACD, we have bearish divergence signaling a top. Once we get that weekly pivot in place, we can assume that's a completed wave 5. We're not there yet though. Okay, but we just need to be aware of the fact that we are coming out of here in a weakened state now. It is possible that we go off to new highs in the MACD and we do the same in the RSI, in which case we're still partying. We're still going up over the longer term. We may even get an extended 5th. We may get an extended 3 within the 5th, and this thing can be even more bullish. But now that we've set our high, and we now push to new highs off of bearish divergence at the moment, we're just keeping an eye on it. That's all I'm saying, really. Just keeping an eye on it over the coming weeks and months to see what progresses. Alright then, that is gold. Let's come over and have a look at silver. Okay, so now here we are over on the daytime frame on the silver chart, and silver is still languishing down at near the all-time lows, if we're being honest. I mean, that's not true. It's way off the lows, but it's a long way from a 2011 high. You know, it's not. 2011 high was $48. The 2011 high in gold was around $1,900 an ounce. It's now $2,900 almost. Okay, so gold's way off and the all-time highs, way beyond previous long-term cycle highs. Silver's still languishing below the 2011 highs, and there's a long way off achieving them. So it's just a completely different story down here. Now, doesn't mean they're not related. If they are related, the only real explanation is that silver is lagging like buggery, and I mean lagging on just a scale that he's never lagged on ever before relative to gold, in terms of both being in the bull market at the same time. Right, so if this is a 1 and a 2 and a 1 and a 2 and a 1 and a 2 and a 1 and a 2, right, in our gold count, we're at the opposite end, aren't we? We're at 3 and 4, 3 and 4, 3 and 4, and now we're in the 5th. Right? So we're way, way ahead. Now, I guess you could argue that fits to some degree. Silver bottomed in 2020, gold bottomed in 2016. That's 4 years. Can we be behind by 4 years? Well, maybe. But what do we have to believe is going to happen? Well, there's a series of possible scenarios, isn't there? One is Gold peaks and crashes in price, while independently of that crash, silver rockets higher. I find that very hard to believe. I don't think it's ever been witnessed that one has crashed and the rest and silver has rallied into that crash. They tend to be sympathetic of each other's movements. So if gold were to collapse in a few months or a year's time or whatever it is, I don't see silver going into the free of the free of the free of the free at that point. I see silver getting walloped as well. So what we need is a period of consolidation then, at least. We need perhaps gold consolidates sideways. Maybe we're not going into a cycle wave one top, maybe we're going into the top of a free and we're going to go sideways in the fall for a long time, and it's going to be slow lagging sideways movement, and silver then races to catch up, and it would have to race to catch up. I mean really fucking move, pardon my language, because it is miles behind. Now you can look at that as a value proposition, and it could be. I hope it is. Believe me, I own silver, I own gold. I would very much like silver to come racing to catch up. Right, but I'm just being honest. What looks like a value proposition could be a value trap. Okay. Gold has certain appeals which silver does not. But, you know, I don't want to go down that road. I'll get stuck down there for ages. Either way, let's just say, digging into the Elliott wave count, where are we? Primary wave 1 into 2 complete. Intermediate wave 1 into 2 complete. Minor wave 1 into 2 complete. And now we've completed a 3-wave correction, which completed in roughly 60 days. Inside of the 80-day time limit of the minor wave degree, we should get our arses moving now and finally get out of here. If this is 1, 2, 1, 2 again, maybe one more 1, then back, and then off. Alright, and then it's the 3 at minute degree, and minuet, and minute degree, minor degree, intermediate degree, and primary degree all together, all pushing higher, multiple wave threes at multiple wave degrees. We are on our way at that point, and silver will go to the moon. Okay, but it's got to get doing it. It's got to get doing it now. Now, there's only one alternative way of remaining bullish, I feel, if that's not the case, and that's the idea that we've gone 1 into 2. Now, I've labelled this intermediate degree, but you could label it primary. It really doesn't matter. We've gone 1 and 2, that's the same. But instead of 1, 2, 1, 2, 1, 2 here, we've gone 1, 2, 3, 4, 5, 1 into 2. And we come back for one more wave 2. So we go 1, 2, 1, 2, and then it'll be carrying on again. 1, 2, 1, 2, and then we break out in the 3. It is possible, but given what we know already in gold's behaviour, this just adds more time to the problem. Gold continues to march higher, silver continues to consolidate sideways on the launch pad. It pushes us into that unlikely scenario of gold having a major top while silver rockets higher. Like I said, I've never seen it happen before. I've seen gold consolidate. Historically, I've looked at the price data. I've seen gold consolidate and silver rush to catch up. But I haven't seen gold collapse while silver climbs. So we'll have to wait and see. This is a possibility that we get that deeper correction and then move higher. But I would very much like, personal preference, I know I shouldn't be mentioning it, but looking at the chart, I would like to see this base channel breached, finally, to the upside. That means getting price above $40. Back tested at smaller wave degrees and then pressed on higher to new all-time highs and beyond. And I would very much like that to get its arse into gear within the coming days, weeks and months. Alright, so that's where we are in silver. 1, 2, 1, 2, 1, 2, 1, 2. If we break the invalidation point at 26.19, we'll be spotting the invalidation at 24.25. And then if that happens, we'll be looking for this deeper correction of another zigzag down into wave 2, into the golden zone of this pivot here, back to the base channel one last time, one last hurrah, 1 and 2 again, and then finally on our way, right? They're the two bullish scenarios. If it's not bullish, bit of a bold statement this is going to be. Maybe I'll regret this, but if this is not bullish and we're not racing to catch up gold and silver, then everything I think we've learned about the gold and silver ratio and the precious metals working together as monetary metals, I think we can forget about that, because there's no reason at all for silver to follow gold and to break out and to do all of those expected things if it fails here. If it collapses here and breaks all of this down and it can't get out of these lows while gold is sitting on the moon, there's no reason for it to do so. Okay, so on that note, what would a bearish idea be? Well, this would be a bearish idea. While gold went off to new all-time highs beyond the 2011 high and all the way up to $2,900, maybe 3,000, maybe beyond, silver just went like that. A big sideways FU, basically. Now, if that were to happen, we get an entire bull market in gold and just end up back at the lows in silver. To claim they are in the same monetary metal space and to claim that they are essentially related in some way in terms of their expected movements, I think that would be folly by that point. I think we'd have to accept that's no longer a relationship that's valid, and that we have to really look at them differently from that point. Now, we should look at them differently anyway, but what I mean is as monetary metals, they're not the same anymore at that point. One is hedging out and one is doing nothing. Right, so bold statement, I know. Don't want it to happen. Hope it doesn't happen. Right, but it's a possibility. While we're still languishing around these lows, it's a possibility that it's just one big sideways FU. Okay, so there we go. We've got our... we don't need to look at that. That's a backup plan. So for the meantime, we are 1 and 2, 1 and 2, 1 and 2, 1 and 2. Whereas gold is 3, 4, 3, 4, 3, 4, 5. We're about to go into all of that bit. So we're looking at weeks, months, multiple quarters even of just skyrocketing pricing about to unleash itself. Okay, if that fails to materialize, we'll look at the local minute wave 2 pivot low of 26.19. If that doesn't hold, we'll look for that deeper correction for the zigzag. But if we fall out of this base channel and then we invalidate $16.21, it's all over. Right, this is just one big sideways mindfuck. Okay, because it's just not remotely related to gold anymore at that point, is it? We're just being honest with ourselves. So, fingers crossed, guys, for all the balls out there, that it's party time, and off we go. If it's not, we do have a backup plan, but it leaves us on shaky ground. And if neither of those turn out to be true, then owning silver was a waste of time. Alright, and so there you go, guys. That's a gold and silver Elliott wave count. Let's have a quick look at the technical analysis here in silver, see what we can see. Let's come out to the daily time frame. So, is there anything encouraging? There are a few encouraging things. So, let's just back out here. I want to start the daily time frame, I think. Right, now if we take the prior levels of the highs which we've recently gone through in silver, I don't count that one standalone candle with gaps either side of it. I'm looking at a dominant high here. I think that was a swing high within a correction. We can see that, mark that point. Okay, the OBV cumulative volume is still bullish, in an upward trend of higher highs and higher lows, and the support's being tested multiple times and we continue to move higher. So cumulatively, volume is bullish. We continue to accumulate and push higher. Right, on the daily time frame. Come out to the weekly. Same gig on the weekly. Although we have weakened back below that level, we are still above it, and we continue to set higher highs and higher lows in an upward trend of higher lows here in the OBV. We had bearish divergence between these highs, just like we saw in gold, remember? But that may well have played out with the move back down in the RSI to neutral. On the daily time frame, that RSI reached oversold conditions again, which we've now moved on off. We haven't got the momentum that we had in gold, but we're not in the peak 3-4, 3-4, 3-4 all the way up to the top. We're still basing. So we haven't got the momentum that we've got in gold. We haven't swung high again like we have in gold, and we haven't even gone into overbought conditions like we have in gold. So we're just weaker, all round weaker here. Okay, but but we are still going in the right direction. We are still trending higher, higher highs and high lows. Even when we swung low in this move here, we were still setting higher lows in the OBV. on the weekly time frame. We've had some push from volume over the last week. Looks a little bit more bullish. MACD, the average is crossing through the signal line. Bearish momentum appears to have died off. No green histogram bars yet to report like we've seen in gold, but it should be on its way. Hopefully this is the breakout we've been waiting for and we can finally get going. Let's bring up our moving averages. So the last larger wave degree correction through the 250 weekly moving average was this large 1-2 here, breaking the green line. Then the subsequent where 1s and 2s come back to it, through it and back to it, typical smaller wave degree behaviour. We then move above the 60 and start backtesting that for the next wave degrees. These could be 3s and 4s, remember, into that alternate idea. Or they could be 1s and 2s again, in which case we rocket higher. Daily time frame. We came back to a 250-day exponential moving average again as support. Okay, we've since moved away from it, bringing the 10 and the 20 back through the 60, all pointing up now, with the 250 long-term average also pointing up. Some volume coming into this move, volume increasing throughout the rally. So as we corrected, volume came down, suggesting that it was indeed corrective rather than bearish, and then we've come up with the volume as we traded higher. So there is support behind this little rally. It's just a little rally at the moment. It needs to get going. Okay, so that is it, guys. That's gold and silver. Gold's on the moon, continuing higher, strong upward trend. Silver's still languishing down on the launch pad, but if the primary count is correct, party time is just around the corner. Let's keep our fingers crossed and hope it is. It would be really nice. Alright then, guys, thank you for joining me. If you like what you're seeing and you're new to the channel, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. And if you want to learn Elliott Way for yourself, you want to get access to a large public Discord, you want to get access to multiple hour live streams where you can make requests on me to cover the assets you want to cover, and you want to get access to all this other educational material and a great community, feel free to sign up to the Patreon. There's a link in the description box below. And if you're not following me on Twitter, please do so. I do occasionally remember to actually post video links up there. Not always, admittedly, but either way, that's up to you. Until I see you again, take care of yourselves. All the best. Bye-bye.